Sheffield Resources, ASX listed. We're a mineral sands company. We're currently 75% through construction of the Thunderbird mine. And I'll provide a little bit of background on who the company is and what we're currently doing. So the intention with Sheffield is to create what I would call a sort of mid-cap multi-asset mineral sands company. We're going to do that around our core asset, which is the Thunderbird project in the far northwest of WA, the Kimberley. That project, as I said before, is 75% complete. We started construction pre-FID. We made the FID in October last year, and we're now 75% complete. It's fully funded, and we expect to complete the project with about 50 odd million in facilities still unutilized. So we're on track for on time and on budget delivery of the first phase and delivering products to customers the first quarter of next year. We're then looking to build other growth opportunities within the portfolio. So we own half of the Kimberley Mineral Sands joint venture, which has the Thunderbird project. There is growth within there. There's a potential to expand the project, but we're also looking to add future growth as well. And we recently optioned a project in Brazil called the South Atlantic project, which is another potentially another material new mineral sands mine. I'll just talk a little bit about Thunderbird, our core asset to start with. To put it in context, Thunderbird is the largest mineral zircon reserve in the world at the moment. It's about 50% larger than the largest current operating mine, which is Namakwa Sands, one of Tronox's mines in South Africa. And as you can see from the position on the graph, it is both high grade in zircon and high grade in titanium dioxide. So it's relatively unusual, both in grade and scale. It has the potential to support a very long mine life. And so Thunderbird is going to be one of the key operations supplying the zircon sector for the coming decades. In terms of value proposition, we're currently building stage 1, and we have always presented a stage 1 and 2 combined project to show the potential of the ore body. Stage 1 on its own is a circa 840 million NPV project. So our share about 420 million. And once the debt's repaid in 2027, our share of cash generation from this asset we see as being between 100 and 120 million Australian dollars a year, based on long run prices. So certainly below where they are today. I've already said this, but I'll say it again. We're a little bit unusual in the sense that we're almost finished building this project, very well advanced. We continue to be on time and on budget from when we made the FID decision in October last year. We will be completing construction in the fourth quarter of this year before commissioning and commencing operations, and we expect to deliver the first products to customers in early 2024, which is significant in the sense that the maximum debt draw point is always just before you receive your first payments from customers. So summarising Thunderbird, said it's the world's largest zircon reserve. It's a strategically significant asset. It's well advanced, fully funded. We expect to be in production towards the end of the year. Significant cash generation potential over a very long life. What we've recently done is optioned a project in Brazil called the South Atlantic project. The South Atlantic project is located in the far southeast of Brazil, near a city called Rio Grande. In the bottom, I think if there's a pointer here. Nope. The bottom left-hand corner is the city of Rio Grande. That is a significant port. It's the second largest soybean export port in Brazil, serviced by Cape and Panamax-sized vessels. And in fact, the lake allows handy and handy-sized vessels into it. So we're in the unusual situation of having a 80-kilometre long mineral sands deposit that actually ends in a bulk port. It has the best infrastructure endowment of any mineral sands project I'm aware of. The project runs, as I said, 80 kilometres up the coast. While it's broken into 4 deposits, that's just for licensing purposes. It's effectively one continuous piece of mineralisation. The most advanced sections are the southern area, Retiro, and the northern area, Bougeroo, and we have exploration targets over both of those areas based on extensive historical work, between 500 and 720 million tonnes of mineral sands, of ore. The Retiro deposit is, the intention is that in the 18-month period, we've got an option over this. We're spending $2.5 million alongside our Brazilian partners who are spending $3 million. There's been a lot of historical work done, so a limited amount of work is required to bring that work up to JORC standards. So we expect at the end of 18 months to have the JORC resource over both Retiro and Bougeroo, and to have the mining installation permit in place for Retiro. It's already got an environmental permit that just needs the installation license, and along with that comes the mining decree. So the intention is after 18 months that the project would be ready to move towards execution. We have an option to acquire 20% for investing another $12.5 million at that point, or staged over another 18 months. And then we have a pathway to go from 20% to 80% by funding the project, and then ultimately options to acquire the remaining 20%. Our partner is the main partner. 75% of this project is owned by a Brazilian family company, with another family as the other 25%. Brazilian family has been in the mining sector since 1976, and they've had a number of situations where in their very extensive land holdings, when they identify deposits that are of value, they find a relevant strategic partner for them and then would work with them to develop the operation, and ultimately have typically exited once they're in production. And so some of the assets that they've been involved in, had some of the original assets in Yamana Gold, our resources. So they've got a track record of actually working with international partners to create value. For those who don't know what mineral sands are, just very, very quickly, titanium dioxide is, titanium minerals is one half, zirconium oxide is the other half. Effectively, titanium dioxide is primarily used as an opacifier, and what it is it what makes things like paint or plastics, paper, it's what makes them non-transparent. That's the main application for titanium minerals. There's only a very small amount used for metal and welding rod. Zircon, about half of zircon is used as an opacifier for ceramics. So if you think about it in a bathroom, anything that's shiny and white has got lots of zircon in it. It's what gives it those properties. And then there are also some other industrial applications for zircon, particularly in foundry and chemical uses. In terms of where we are in the market, the prices of both primary commodities are near record highs and have been there for a period of time. This is really driven by supply side dynamics mostly, particularly in zircon. Three leading producers, Rio Tinto, Tronox, and Iluka, collectively supply about 55% of the world's zircon today. All of their mines are nearing the end of their life, and so all three are struggling to maintain throughput, and in particular the case of Iluka, the largest single source of zircon in the world, the Jacinth Ambrosia, is about 3 years out from closing, and so there is a significant supply gap emerging. To put it in context, we would need to do more than 2 stage 1 Thunderbirds to replace the production that's going to disappear when Jacinth Ambrosia closes. So we've really got a supply-driven story supporting price in these commodities rather than a demand-driven. Very quickly, in summary, ESG, I won't say too much about this except that our main focus on ESG is, with the Thunderbird project in particular, is the relationship with our traditional owners, the Aboriginal community. We're in a part of Australia where a significant proportion of the population are Aboriginal, about 40%. And so we have a very high focus on maintaining a good relationship with our host community. We're targeting matching our workforce to the local community by year 8 of operations, so 40% local of Aboriginal employment, and we've got a big focus on creating Aboriginally owned businesses to support us in operations. With a long mine life, we've focused much more on operations as being the phase where we can create sustainable opportunities for our host community rather than the boom bust of construction. We're fully funded so we're expecting first cash flow to come from the Thunderbird project in 2026. Effectively, once the debt lockup is over, we'll still be repaying debt in 2026, but should be surplus cash available to distribution. We recently completed a capital raise to ensure that we had sufficient funds on hand to fund the company, corporate costs, very modest corporate cost. We run the company for between 2 and 2.5 million Australian dollars a year. And then we pre-funded exercising the option for the project in Brazil. So we expect to, if we exercise the option, spend about $26 million prior to receiving the first cash from the joint venture, and as it stands, we have over $27 million in the treasury. So we do not expect to be raising money again prior to being a cash generating producer. Just to sort of recap, why Sheffield? Why now? 75% complete, fully funded. We see no risk of requiring additional capital to complete the project. It's going to generate significant cash returns. So we expect, we have a market cap today of $200 million Australian. As I said before, we expect our share of cash flow from stage one alone to be 100 to 120 million Australian dollars a year. So about 50 to 60% of our current market cap. And the NPV of stage one alone is $420 million. So we believe there is deep value in the stock at current share prices. And prior to the equity raise, we had started to see the market slowly recognizing that and walking our share price up, and we hope that will continue again. Thank you for your time.